Hello there, this is Jason Sweezy from Forex Trading Watchdog, and it's been a long time since I've done a video on my channel. I'm sure a lot of you know I really like to choose my strategy of divergence over most anything else. The only tools I believe in trading are divergence, support and resistance, and trend lines. And yes, I use a couple of moving averages. Yes, I do. That's just part of my trading plan when I decide to enter a trade. So anyway, it's been a long time. My mom has passed away, so I just took a break away from it for quite some time, and yeah, so that's why I haven't shot any videos in the last couple of years, I guess it's been. But I'm back, and I want to share with you all the divergence setups each day that happen in the morning session, US session. Okay, so without further ado, as they say, let's get to it. If you can't get to it, here's to it, to do it again. And we're going to do it again. Okay, so you can see there's different colors here. This is the start of the US session at 8 o'clock. And this is lunchtime right here, 12 o'clock. Okay, so throughout the night, we're first looking at gold. Okay, gold versus the US dollar. And throughout the night, it just drifted down and down and down from up here. Okay. However, we started right here, 8 o'clock, to look for a setup. So if you wanted to call this, it's off by a few pips, but see, double top right there. You would have entered right here, okay, because there's divergence. So I'm getting ahead of myself. You need to draw it on the indicator of choice. The indicator of choice that I use, it's called the OSMA with standard settings. 12, 26, and 9. I've never changed it, never need to change it, never need to tweak it. I only use this indicator to find divergence. That's it. I don't buy when it's blue or sell when it's red, okay? I only look for divergence with it, and that's all. And as you can see, I got my pivot on here and my support lines. It's an indicator, okay? Very well respected indicator. And there's my R1, R2, R3 up there. I also have another indicator that I use that marks the whole numbers and the in-between 50s numbers. So anyway, let me just make this bigger to show you this trade. This was non-farm payroll, so I wouldn't advise trading today during this, but most people do anyway. They just jump right in with everybody else. So as you can see, right at 8:30, it started to collapse. Came down about 140, 135 points. And retraced back up about 70 points. Anyway, if you would have got in here, right here, just before the open, I wouldn't have sold it before the open. I would want to see confirmation. But like I said, I don't trade the news. It's very, very risky. Okay, but this was a winner. Double top. And right here, okay. You pull that up and I'll show you. They are definitely what we're looking. If this was to go up like this, that wouldn't be the divergence we're looking for. Where this is like double top, so it's down that we point it. And when there's a double bottom, we want this to be pointing up. Okay? There's 4 different kinds of divergence that I trade. I trade what I call easy to see divergence, bullish and bearish. I trade double top and double bottom divergence, and I also trade what I call hard to see divergence, okay, which is also known as hidden divergence. So anyway, we came down, went sideways, broke through the sideways chop, came down a little bit more, made some lows, some more lows. So we had a trade to enter here, right here. Okay. Not enter here, but I mean, there was another setup right here. The entry was right here after the moving average crossed up over this moving average. Okay. So if you would have gotten this one, stop would have been down here, and it definitely gave you 2-to-1 win-loss ratio on that trade. Okay. This is gold that we just went over. XAU USD. Okay, that's it for gold. Let's take a look now at oil. Okay. Now oil is kind of tricky to trade today, as you can see. There's actually no divergence how I would trade it, because I wouldn't go more than 2 valleys or 2 mountain peaks. And there's there's 2 here, but you'd have to take it to over here because of this long wick, okay, to be a buyer. So let's say we took it from here. See, can you do it there? Well, no. See, it's still not right. Here's the next dip. So if you put it there, this is like trying to think your way out of like when you think too much trying to do the setup, it's like, all right, I gotta turn that off. When you think too much about the whole setup and everything, you might want to just hesitate and not do the trade. So right here, okay, and right up to there, that's divergence. So you would have got in, where is that? There it is. Okay. Let's make this arrow bigger. One size bigger. Okay. So you would have got in right here. Your stop would have been down here, 60 pips or so. Went up 107 pips. It was a winner. Okay? And that's it for that pair. For that oil US dollar. And there was actually divergence up here, actually. Okay, I'm back. I just had to pause it there for a sec. Let me just show you quickly. There was divergence up here. It's very, very tricky to see it, but it's right there. And right down like that. Okay? And you would have entered right in here, and look what it did right after you entered. It shot right up, but it didn't hit your stop, because your stop, I would put it like 5. Well, it just depends, like what's above there. Oh, nothing. Nothing for miles and miles. Okay. Just looking here. 72. Yeah, I guess. Yeah, it's hard to put this one indicator on here that I use. It just draws them all over the place. There's too many lines. Let me just try and put that on. I'll be right back. Hold on. Okay, back again. So, yeah, so you see this indicator here, $71 a barrel. 71.50 a barrel up here, this light blue line. I need to change that to the darker blue to see it. But anyway, the next level to put your stop would have been up here at $72. That would have been a big stop. Oh, not too bad. 60 points. Did it go down 60 points? No, it went down 40. Anyway, it did its run right here. But there was divergence up there to sell. But I wait for a cross down of the two moving averages before I enter my sell. And if you put your stop up here, it would have came up here and freaked you out. But then it's just shot back down again and did some chopping. If you were brave enough to hold on, you would have been okay. Okay, so that's it. I don't trade after 11, 12 o'clock. And that's it for oil. We got the euro yen. Let's look at the euro yen. We'll just make that bigger. The market's still open. It closes in about 12 minutes. When I do the next video on Monday, it will be, around 11 in the morning, 12 o'clock, something like that. Or after lunch. That's when I'll do the video. It won't be at the end of the day like I'm doing it right now. Okay? So anyway, here's the non-farm payroll spike right here. This is the euro yen. And then we pulled back and went up again and did a retracement. Then went up here. Okay? And I don't just show you the winners, I show you the losers. Okay? So we got a high and a higher high. Actually, we can take it from here. Like that. And on the OSMA, we have a lower low. When you're looking for divergence, you always look for higher highs on the chart. You always look on the chart before you look at the indicator. You find the divergence on the chart first, then you look down and you look at the indicator and look, okay, is it divergent? Yes, it was right here. To sell right here, okay? So if you got in right here, your stop would have been 20 pips and it never went down 20 pips. And then it went up, okay? And we had divergence again. So if you shorted here, you would have got out here probably for break even, okay? So here is the divergence right here. That's it. This one going down, this one going up. Entry would have been right there. Right on the opening of this candle right here, you would have got long, and up it goes. Your stop would have been 15 points or so. Okay, it went up 55 points or so, or 47, 50 points. It went up 50 points, pips. It went up 50 pips, okay? Now, if you did the other sell, the arrow would have been like this. On the opening of this one right here, down it went. But like I said, it never went to your 1-to-1 win-loss ratio target, okay? And that's it for the euro yen, also known as the EJ. Okay? Okay, so we covered EJ, pound yen, gold, oil. Now we want to go look at the indices. We don't have to cover them all. NASDAQ. Let's look at the NASDAQ. Oh yeah, it's on the 5-minute. All right. Okay, so there's no divergence here. Unless you want to some people when they look for a trade, they will try and convince themselves for sure. This is it. This is divergence. And let me show you here. There are so many times where you'll put in a low, you'll put in a retracement, right? Then you'll put in It's not another low. It's a pullback, but it's not all the way. So I call it like, you know, kind of like short changed. Like to make it divergent for sure, right? This would need to come right down to here to make a double bottom, or come down further than this low to make a lower low. Okay? So there was divergence here, just like this, see? And if you just wanted to draw a line right through there like that, okay, there you go. There you have it. So if you would have got in, here's the opening of the stock market. So if you would have got in, would have got in there. And there is 132 points to the top, okay? And that was the divergence, okay? And then we had divergence up here as well. Let me grab that. I'm a little rusty here. I'm a little slow, okay? I will get faster after I do a couple of videos. So right here you could put it right here even. Okay, and from there to there. That is divergence. You bet it is. And where's the arrows? There it is. There it is. Okay. This is hard to see bullish divergence. You entered right there, and up it went. Right there. Went up another 83 points. If you would have done the trade there, that's the outside my trading time from 8 till noon. That's outside of there. I usually trade just inside this block of time. Okay? Yeah. So that's it. That's all I'll show for there. So that's the NASDAQ and the Dow. Let's take a look at the Dow. How's it looking? Yeah, see, same kind of thing, but see, there's no divergence here. There isn't to buy it, to take it out. And then it went sideways till lunchtime. There's no divergence there. You know, you can look at it in the way, well, we had a cross up of the moving averages, right? We could hop in and woo-wee, up we go, right? So let's say we got in there. This is not divergence. Went up like 286 pips. And we got the S&P. They all kind of move in the same manner. Look at the S&P. See, this is not divergent right here. Right here. It's not divergent. The only thing you could trade is if we had a cross up of the slower moving average, the 5, above the 7, EMA. That's what these two moving averages are. Okay, but we did have a setup at the same time as the other one, like I told you. So you go like this to there, and this to there, and you bought it right there, and up it went, 25 points. This is the S&P 500, and that's it. So anyway, I hope you enjoyed my video today. I hope you'll come again on Monday, and we'll take a look at the setups once again. And thanks for listening, and thanks for watching, and please hit the like button, and if you haven't subscribed, please subscribe. This is Jason. We'll talk to you soon. Have a great one.